Hi there. Welcome to Quasi Media. I am your host, Innocent. Today, we are going to talk about investment opportunities in bonds in Tanzania. We are going to talk about, in this particular session, we're going to talk about one, what bonds are, two, the various types of bonds available in the market, three, various concepts about bonds, and four, the benefits of investing in bonds, and five, about the bonds that are actually available in the Tanzanian market, and six, how do you actually participate in investing in bonds in Tanzania? Let's get into it. So first things first. So what is a bond? So a bond is a form of borrowing, normally by a government or a corporation from the general public. As opposed to other forms of borrowing, bonds allow the investors in them to actually trade them as securities in financial markets. Yeah, so the issuers of these bonds actually issue these bonds as securities, and these securities are tradable in the market. And the bonds, like other forms of borrowings, pay interest, or as they are known in the bonds market as coupons. Yeah. So, what are various types of bonds available in the market? There are many types of bonds in the market, and without caring about the categories under which they are actually categorized, let's go look at various types of these bonds. So, bonds category number one is corporate bonds. So these are bonds that are normally issued by corporations, and there are so many of them in Tanzania. And the most recent that were issued in the last quarter or by the end of 2023 include the NMB Jamii bond and the CRDB Kijana bond. And of course, there are so many other bonds in the market as well, like TCMRC bond. And then there are treasury bonds. So these are bonds that are normally issued by the central government for two reasons, actually. And reason number one is to provide financing for the government budgetary operations. Number two is for liquidity management as part of the open market operation, or monetary policy as a monetary policy instrument. And then of course there are municipal bonds. So these are bonds that are normally issued by local government agencies like city councils or municipal councils. And of course, there are agency bonds. So these are bonds that are normally issued by independent government agencies, and normally for financing specific projects. Well, and then of course there are callable and put-up bonds. So the callable bond is a bond that gives the right to the issue, but not the obligation to buy back the bond before maturity. And then of course there are putable bonds. So putable bonds are bonds that gives the right, but not the obligation, the bondholder or the investor the right to sell back the bond before maturity to the issuer. And of course, there are euro bonds. So a euro bond is basically a bond that is issued by an institution or government, not in their own currency. So let's say a company in Tanzania issues a bond in euros or in dollars. So automatically that is called a euro bond. And so also, if the Tanzanian government issues a bond in dollars or in any other foreign currency, it's automatically called a euro bond. And euro bonds issued by governments, normally called sovereign bonds, have these fancy names that go with the identities of specific countries. So, for instance, if the euro bond issued by say by the Japanese government is normally called the samurai bonds. The euro bonds issued by Australian government are called kangaroo bonds, and then issued by the New Zealand government are called Kiwi bonds. So every country has these specific national symbol that they use, and then I want to identify the euro bonds in that specific name. So those are the various types of bonds. There are myriad of other types out there, depending on specific intricacies, and we won't go into those details. So let's take a look at the various concepts of bonds. So first concept number one is um, face value. So what's the face value? So face value is basically the principal of the bond. Now, this could be the entire principal of the bond. So say CRDB issues a 100 billion shilling bond, or government issues a 1 trillion bond. So that's the principal. But normally this principle is broken down into specific divisible units, normally a million or 10 million, 100 million, depending on the on the arrangement in that particular bond. Yeah, so that's called a principal or a face value. And then, of course, the coupon. So the coupon is the interest that is paid per annum. It's the direct per annum of that particular bond. So it's just basically it's an interest rate that is payable to bondholders or to investors who invest in this particular bond. And then, of course, there is another concept called the yield to maturity. So this is the minimum required rate of return that investors expect if they hold the bond to maturity. So yeah, so if I expect to generate 12%, if I hold this bond to maturity, the 12% is called yield to maturity. And then, of course, there is current yield. So the current yield is just a quotient of coupon payable to the current price or the price of the bond. And of course, the tenure. So tenure is just basically the time to maturity of the bond. And then maturity is basically the last day the bond will be available. So the last day on which the bond issuer has to pay back all the money to all the principals back to the bondholders is called maturity date. So those are these few concepts about bonds. I'm aware that there are hundreds other concepts about bonds, but those are the first and more foremost concept that you want to know about bonds. So what are the benefits of investing in bonds? There are two particular advantages, if not three, or benefits of investing in bonds. So number one is income generation. So if you invest in a bond that not pays interest or coupon, you are generating income. It's cash flow. And then, of course, there is capital gain. So bonds, since they are tradable assets in financial markets, they can appreciate in value depending on the various movements in macroeconomic indicators. So if, for instance, interest rates are rising, bonds tend to decrease in value and vice versa. And of course, another benefit is you can use the bond as a security, to borrow money from financial institutions because they are actually acceptable as collateral. So those are the three important concepts of investing in bonds anywhere in the world, but also specifically here in Tanzania. So if you want to invest in bonds in Tanzania, what are the options available in the market? There are so many options available in the market, actually, and there are both corporate bonds and treasury bonds. So the treasury bonds is the largest in the market as of late. The treasury bonds outstanding were more than 20 trillion shillings. So bonds that are available, there are corporate bonds, and some of them are CRDB and NMB bonds that I already talked about. And then, of course, there are TCMRC bonds that is available in the market, and is certain other smaller bonds in the market as corporate bonds. And if you want to invest in NMB bond, of course, the latest issue, you definitely are going to generate 9.5% as is the coupon that is payable. And for CRDB Kijan bond, it's 10.5%. So for treasury bonds, there are, I would say, hundreds of treasury bonds with various maturities, but the government of Tanzania issues treasury bonds with these tenures. So 2 years, 5 years, or 7 years, that is kind of not issued most frequently these days. And there's a 10-year bond and 15-year bond and a 20-year bond and the longest one is a 25-year treasury bond. And these are the interest or coupons that each one of these pay. So two years bond pays 7.6% per annum, and 5 years pays 8.6%. The 10 years pays 10.25%. The 15 years pays 11.15%. The 20-year bond pays, let's see, 12.1%. And over the 25 years bond pays 12.56%. So those are the coupons that you expect to get if you invest in any of those treasury bonds. Now, there is one advantage of investing in longer tenure treasury bonds, excluding the 2-year treasury bond. The 5-year through the 25-year treasury bond normally are excluded from income tax. So from income tax. So all the interest that are generated generated to bondholders normally pay no taxes. So all the income, all the money you make, from investing in the 5-year to 25-year treasury bond is not taxable. So all the coupons that you'll be receiving are not taxable. And this is is meant for the government to actually improve the bond markets in Tanzania and give investors the incentive they need to actually participate in in bond markets. The last part is, if you want to invest in bonds, what exactly do you do? So there are two ways you can invest in bonds. One is you invest directly in the primary market. So when the bond is actually being issued, whether by a corporation, which is normally comes in specific issues, or by the government that normally issues these bonds twice a month through online auctions. So you can invest in the primary market, and then of course, if you want to exit your investment position, these bonds are listed on the Reston Stock Exchange, and you can sell them to other investors willing to buy or to invest in these bonds. And then of course you can do in the secondary market. So in the secondary market, if you miss out in the primary market, you haven't missed out completely, because you have the opportunity to actually buy the same bonds in the secondary market, normally in Tanzania, the Dar es Salaam Stock Exchange. So in each of these two ways in how you can invest in these bonds, you can you have two opportunities. I mean, you need to have an account. So the account that you need to have is called a CSD account. So a CSD account, or Central System Depository account, is an account just like your bank account that holds the titles, or holds your rights as the owner of extent number of securities. So if you have invested in a stock market, if you have bought shares of any company, you have a CSD account. Also, if you have bought bonds, you need to buy bonds, you need to have a CSD account for the same as well. And for participating in the primary market in Tanzania, you have a CSD account that is recognized by the Bank of Tanzania, and you can be buying and sell, and you can be using that to actually participate in the online auctions that are done by the Bank of Tanzania. And for corporate bonds, it's a little bit different, because these are normal specific issues, and therefore it doesn't come quite as often, and therefore there are no online options available for participating in primary markets of corporate bonds. But you can participate in the online market in the secondary market. Yeah, so thank you very much, and I hope this information that I have given you or have shared with you is going to be very helpful. Please subscribe to our YouTube channel, and let us know what you think of the this knowledge that we are sharing with you. If you find it very, very good, please pass the information to friends and family. Let them subscribe as well, and we'll be bringing you more. Thank you very much. See you next.